morning, everyone, and welcome to the Ultimate Trading Webinar for Beginners. My name is Danny, and I will give you the webinar today. We will open a notepad for the notes. Of course, if you guys would like to do the same, so to jot down your own notes, this might be advisable. And we will begin with the introduction, as I said a minute ago. So as many of you know, AvaTrade is a regulated company. We're here for almost 2 decades, since 2006. We have 9 licenses worldwide. In case you got a question or query along your journey, you can find our customer service very easily at the bottom left. You can chat with us or communicate via the WhatsApp, whatever you prefer. If you're using a different interface, you can contact us directly on cs@avatrade.com. Everything's under the customer service umbrella. This is how you can address us. Related to trading, you can have a senior account manager to give you full support through the process. It doesn't cost you anything extra, and the senior account manager can, like I said, help you refine your journey with us, and you can ask any kind of questions regarding risk money management, regarding your refining your strategy, really anything that is on your mind. A senior account manager is there. Besides that, like I said, we're going to have the webinar today on something called the web trader. This is what we're looking at. This is obviously the desktop version when I'm using on a computer, but we also have the AvaTrade's trading app, which is the app you can find on your personal phone store, and you can download. Besides that, we have the MT4, MT5, Ava futures, Ava options, and Ava social. Obviously those which I've listed up, this is quite self-explanatory. I guess whoever familiar with it knows what that is. MT5 as well. Ava futures is a different concept. We're not going to explain how future works, but you guys can explore. And Ava options is also a different concept. But Ava social allows us to do copy trading, and that's great. Why is that great? Because copy trading allows us to link our account to another account and to copy the strategy automatically without us doing anything. So basically, if we're trading A and we have $10,000 in our balance, and let's suppose that our level is somewhere in the beginning. Okay, we're not even intermediate at this point, and we would like to copy another trader. Okay, trader B is an example, which is a more experienced trader, or maybe not, but we want to copy his from his account. This way, if I download Ava Social, I can select Trader B. Obviously, it would have a different name. It's not going to be called Trader B, and it will allow me to link my account. This way, what will happen is my account will trade the same way as Trader B is trading. Now, you probably wonder, but Danny, what if the account that I want to copy doesn't have the same balance as I do, which is very natural since we have $10,000 in our demo account, maybe. But as a beginner, I'm not sure I'm going to have $10,000. Maybe I'll have 100,000, maybe even 10. Okay, but what if the account doesn't have the same balance? So what can we do in this case? We can select. This is not something I can show you now. You will see it on the app. You can choose to link the account, still to copy the strategy, but to do it with a lower lot size. This way, you're going to copy the strategy, but the margin cost you're going to use, your account is going to use, is going to be reduced. This allows you to contemplate and decide if you really want to copy the strategy to its full extent. Maybe you will add more, more funds, or whatever other decision you'll make. But that's the idea. It's a huge time saver. Obviously, if it runs automatically and it goes well, I can just copy the trades, go do whatever I need to do my work. Okay. Of course, I would advise each and every one of you to make a little bit of research before you go ahead and select your your candidate. Okay, so this is regarding Ava Social. We're going to carry on with the menus to the left. Of course, if there are any questions until this point, guys, about anything that I said so far or about Ava Social, you're welcome to share with me. Now we're going to go from top to bottom. Like I said, we're going to look at the sorry, the menus here. This is where I can find my personal details to make any payments, to withdrawals or deposits. This is where my personal details are going to be. Underneath, we're going to have positions, if we would have any positions, orders for pending orders, history, which I can determine what range will be displayed on the chart. This could be various from days to week. Sorry, just a second, guys. We can select, of course, from the 7 days up to this year, as we can see, or we can even define a specific time frame from date to date of what we want to see here. Underneath, under signals, if we click on here, we can see that we have access to signals. And we can click on the arrows at the upper left to fold it down to see the whole section. And we can see how it's constructed. So in here, we've got different categories, commodities, cryptos, or all, which is what we see, the name of the instrument, the sell or buy type. Then we see here stop loss, entry, take profit, view signal, and the time that it was produced. Obviously, there will be a reason for me to take a signal that was just analyzed rather than a signal than few hours ago. The reason is, since the market is moving and each signal contains a certain level of analysis, you see, when I click on view signal, I didn't do anything special, by the way. Just click here on view signal. And then we see a bunch of analysis in here, resistance, support, and the signal last, which is the initial price that we would analyze the scenario. Now, there are two scenarios. We can buy or sell. If we buy something, we always want the value to increase. And if we sell something, we want the value to decrease. Therefore, based on the resistance, which we can see, let's also match the validity to the picture. The validity here is daily. Therefore, each candle on this chart represents 1 day. In here, each candle is, let's see, clicking on the top left, by the way, 1M is 1 minute. So scrolling down, I've got hours, days, weeks, and months. Let's change to days to match the chart. Clicking and drag it down allows me to squeeze the chart to get a more precise picture. And now if we would like to place the lines on the same values as we see here on the resistance, which is, by the way, the guidelines of where our take profit can be. Now, let's maybe even switch to hours. Now, if I focus, don't worry, guys. I'm going to explain everything that I'm doing. I will, I'll show you that. It's not, you don't need to know anything that I'm doing now because I'm just doing this to show you, okay? Just, let's see, another one here. Another one there. So I'm just copying from the picture, right? I'm just copying from the picture, not doing anything special. This is not mandatory for you guys. Like I said, it's just to help emphasize what's going on here. Okay, so now basically based on this picture with support and resistance, you probably noticed that the resistance are higher lines, the support are lower lines displayed on the chart. And based on those levels, we've got something called TP, take profit, and stop loss, SL, stop loss. Now, all we need to do is to select which scenario we prefer. So if we go with the buy as an example, and we click here on a buy, we see that it's already set for us the take profit and the stop loss, which seems like the stop loss at the moment is not in the correct place. So we're going to correct it. Okay, and now we see, let's try it again. Let's try it again. So we're going to click view signal. And again on the buy. Okay, it seems like this signal has already changed its analysis. We're going to pick something else. It's just to show you, so it's not going to make a lot of difference. Let's try Ethereum. View signal, clicking here on the arrows. Okay, again, matching the validity. We're not going to place those lines. We don't need it again. We understood what it does. Clicking here on the buy scenario, and we are good to go. Okay, we're basically good to go. The take profit, like I said, is typically designed based on the level of resistance we saw, and the support, the stop loss is based on the support line that we saw. And as I explained, just generally, resistance will be in a higher point at the edge point of the chart where my pivot line is. Okay, I'll show you an example right here. And support will be the bottom. So this is my support line right here. This is my resistance line right here. The signal has different reference, but I guess you guys understand what this means. Now, what is the take profit that's in here in the stop loss? Take profit, there are basically two types of orders. We've got market execution, and which is buy or sell by market. I guess people can be familiar from MT4 and MT5 about that. And we've got pending orders. What are pending orders? We can see three: execute when price hits, okay, which is opening the position automatically when reaching the price. And we've got take profit and stop loss. Now, take profit, what it does is, which is closing the position automatically when reaching the price, closing the position with a profit. Okay, you don't need to remember this at all. You don't need to, because if I'll point in here on the eye, they're gonna have the explanation. But it was important for me to write it down like this, very simply, for you guys to understand the idea. So what's happening here is we selected a signal. Again, it doesn't matter which. I'm going to show you another one just because it's so easy to use. So we're going to click on the gold this time. We're going to click on the arrows to expand. Again, validity seems fine, 1D and 1D. We'll go with a sell. You see it says here sell. We already know, okay, we've got support and resistance here. We've got those take profit and stop loss, and we are good to go. Yeah, we're basically good to go. This was made for us with the signals analysis. Now, it's important to understand that the values that we get from the platform are not mandatory to use to launch the position. What exactly do I mean by that? What I mean is I can make any necessary adjustments to this position even if I use the signal. So I can say, okay, let me have a bigger lot size, and let me also get maybe the take profit a little lower this time. So we're gonna go like this. Okay, maybe even a little lower until I'm happy, and basically I can modify whatever I want. But if I don't want to do any of what I did and I just want to use it plain and simple, you see how easy that is. We'll take another one, FTSE, clicking here, choosing the buy scenario. That's it. Yeah, we're good with the signal. We're good to go. We can make any adjustments that we want. Now, what if we see something like that with take profit and stop loss that the values are not here? This is because the market in this case has already passed the levels that we saw here. So then we get a message, the market has already reached a key level. This is why we can't use the signal anymore. So if we'll try, it just doesn't mark the take profit and the stop loss, yeah, like it did with the previous. Okay, well, if we'll choose a valid one, let's go Aussie USD, click here, buy, then we do get this because this is a valid signal. We don't see the message. But if we take dollar index, we've got here the market has already reached a key level. And it's also important to know that the signal are provided by Trading Central and not AvaTrade. Now, what we saw till now, all these things here we see, will be considered technical analysis. So if we take two types of analysis, we've got two types we can recognize, which is technical analysis, okay, which will be averages, statistics, which will be support and resistance, of course, which will be indicators, basically how things are moving, right? Fundamental analysis from the other end will be news, will be articles, will be any kind of really governmental announcements or anything like that, events, special events. Okay, wars, God forbid, wars, you know. Okay, so this will be the why things are moving. So if we combine both, if we look at what's happening on the chart and we combine the news, we get how things are moving and why things are moving. Could be the other way around, but doesn't make a big difference. Anyway, what we see here is technical analysis. How do we get the fundamental analysis? So there are various ways to do this. One way is just to go to Google and search whatever you want. Another way is right here at the bottom. Clicking on the news section will take me to a section that I can find news. And in here, different categories. We've got all Forex, stocks, commodities, indices, and cryptos. At the moment, we see the pre-European market brief, USD, JPY nears 152.00. Gold remains volatile. Obviously, it speaks about gold, but if I'll scroll down, and at the bottom of this article, we've got 4 related instruments, and gold is obviously among them. This can give me an idea what's happening with those instruments. Now, if I'll go down to discovery under analysis, under market buzz, if I'll click that, we get those circly, bubbly things right here. We're going to see it. Sometimes it takes a moment to, there we are. And we see Beyond Meat is right in the center with 11,231 mentions. And if we click that, we're going to see some interesting articles in here. Okay, very interesting. And if, for instance, I would like only to focus on the partnership, I don't care about anything else that is here. You see, when I selected it, it only shows me the articles relevant to what I wanted. And it also shows me here some different parameters. And just as easily, I can click here, select something else, and get the news. Besides that, we've got various earning seasons, which I'm sure everyone's familiar. It's 4 times a year. There are all different ways for you to get this information. Another way to do this, to get more formal kind of news, will be under the economic calendar. So under, you see at the bottom of the list, almost at the bottom, economic calendar. In here, we're gonna find. Okay, so first we'll clear the selection. Then we're gonna click on today. Let's go 1 week forward. Maybe let's even go. Okay, we'll keep it like this for now. And as we see, everything is gray. Okay, and then we got this red line here separates the events. Now, if we look at how the calendar is built, we see that we've got the time of the event, the country, the event name. Then we see the impact, the result, the forecast, and the previews. In here, we've got a bunch of buttons, less relevant at the moment for us. In here, we got this tiny magnify to look for every event that we want. Now, if, for instance, I don't want to see all of that, I want to focus, I'm only trading dollar. Let's suppose I'm only trading US dollar. I don't want to see all of that. So I'm going to click here on all countries. Oh, sorry, I'm going to click on all countries like this. Then I'm going to click on the arrow, and then I'm going to click on the country. And now only the dollar is selected, only US. Now, what if I, for instance, what I wanted to show you just before I do this, Okay, you see that the red line that we see here separates things that already has the result, already has the actual is the result. And underneath, we've got things that doesn't have the result. And you can see that the font in here is a little whiter than in here. So this is how I can identify if the thing's already passed or it's upcoming. So I'm going to select here, like I said, US. Okay. And now I've got all of this. Now, what if I only want to focus on the high impact events? I don't want to see the low, I don't want to see the medium. So I'm going to click on high. Now I only get the high one. We've got here the inflation rate. We've got here all kind of interesting things. What if I want to search for something in particular? Let's say non-farming payroll. Okay, so we're going to click in here on the 22nd. Then we're going to click on the 5th. And let's go farm. Still doesn't find it in the range that we wanted. Let's try it again. Okay. Okay. At the moment, it doesn't seem like I can search into the selection. See, I've selected the dates. Let's go ahead and find it manually by ourselves. Okay, so it's important to know that the NFP, the non-farming payroll, is actually a measurement for the new jobs applied in US in the previous month, which can show significant improvement in US economy, which can be extremely helpful for our analysis. Let's try it this way. Okay, if I can't find it like this, or maybe it's farming, it's written. No. Let's try it with. Okay, never mind. I don't want to delay about it too much. I wanted to show you this particular event, but at the moment it seems like we can't search into the dates, but it's fine. In here with those 5 icons, we've got here at the bottom, at the left side, add the calendar, which allows us to add this event into our calendar. This way, we don't have to worry when the event will take place and to be prepared with our setup of analysis ready to do what we want to do. Extremely useful, especially for people who are busy during the week and have a little difficulty to get to the computer every day. All right. Now, let's begin the second segment, as I said, which will be our practical part. We're going to click here on AvaTrade to go back directly to the default screen. I see people raising their hands to ask the questions. You don't have to do that, guys. I'm giving you a live webinar, which is recorded. You're welcome to write any questions you have, guys. You don't have to click on the hand here. Okay, just use the question section at the bottom left and ask away. Now, we're going to begin the second part like I said. We're going to click on the arrows to fold it down. Then we're going to select an instrument to trade. Let's go indices, and let's see how NASDAQ is doing. Okay, so if I don't want to go through the trouble of, here is NASDAQ right at the bottom, but if I wouldn't want to search the way that I did manually to click and scroll down, let's suppose I want to find it right from here. So I click here on the arrows to expand the screen, and let's suppose I want to bring up NASDAQ. So when I'm in here and I've clicked buy or sell and I've got this order entry to open, please pay attention to what I'm showing you. And now I can delete what I've got here. Type down NASDAQ, selected from in here, but FTSE is still in here. So how do I fix it? I just click buy or sell, and it goes to the right order entry. Now, if I look at the top, I am already familiar. So we saw this search field. We've got here the time frames. We already know this from the signals. In here, we can change how the chart will be displayed, if it's a line or if it's the candles. Okay, now what I notice, if I look at the line and the candles, I noticed that in here it doesn't show me the gap, right? So candles typically would give me deeper depths of analysis. Not always, but this is what we can see in here. And there are also some parts which can show reversal, which I won't be able to see with the candles. Let me put the rectangle just to show you. You see all those nice tails of reversal. If we switch to line, it's not there anymore. Okay, now if I go to the right, we can enable the second option, the crosshair. This way we get the data from the candles, which we didn't have with no crosshair. Yeah, as you can see, clicking here with crosshair, we do get them. In here, we can change different layouts, and it's very nice. Okay, we can even align it like this, and even go to a different, take it to a different window. I guess you guys can explore that. In here, indicators, we're going to apply one anyway, so I'm going to show you that. And in here, we can find all those useful things that can help us do the analysis. So let's maybe take an oval. We identify this nice little gap here. Maybe get rid of the background like this. And what else we can do is we can place a line at the top. We can place a line at the bottom. We can place a line somewhere in the center. And maybe we can think about another one in the middle, right here. Yeah. Now, actually I have to capture the gap, so it would be quite inevitable not to put one in here. Okay, maybe we'll make it red. Actually, this one looks like a cell, right? So maybe make it green. And this one goes red. Yeah, not bad. Another thing that I would like to do would be, we'll keep it for now. I don't want to make things too complex for us, so we're just going to keep it. What I'm going to do is click here on cell to switch to cell, and then I can begin. So we went through what we saw here at the top of the toolbar. We went through the menus, and now we want to go ahead and start composing our positions. So we're going to get rid of a couple of things in here. We're also going to write down the name of the instrument. So it will be NASDAQ, also known as US_Tech 100. All right, we've got a question coming from Sydney. Sydney, you're asking, how can we know that the rate is going up for me to buy the dollars? I'm not exactly sure what your question is. If you can just elaborate a little bit, I'm happy to answer. But for now, we're going to write down the name of the instrument we're analyzing. Also going to write down a couple of things that will help us construct the position with a bit more sense than just randomly taking buy or sell. Now, if for instance, I think that NASDAQ is going to go down, but I'm not sure exactly how far down it can go. So this means that if I'll click here sell, I've got no measurement how much I can gain or lose, right? This means that I also don't know when to close the position. So what can help in this case is to set a certain target. Let's say, for instance, that we would like, is an example, to make $250. Okay, let's suppose, and we would like to make $250 in a day, okay, 1 day. Now, why did I have to think about those things? 250 per day, who cares, right? As long as I make profits, who cares? Well, it does make a difference. The reason is, this gives me psychologically an idea where can I close the position. If I'm satisfied with 200, so this means if it goes down and I'm making 200, I can close the position. Now, why did I state here 1 day approximately planning to close the position? Because 250 is pretty good per day. What about if it's, let's say, per week? Okay, maybe still 250 a week is 1,000 a month. What if this would be once a month? Not enough to buy groceries, right? So there is a lot of difference. It's the same number, by the way. I haven't changed anything. I just changed the time frame that I'm expecting to hold this position. So it has different meaning with the same amount if the time factor is in the equation. So I'm going to keep it for 1 day because I'm quite happy analyzing days anyway. And I see that in the days, we have this nice gap 4 days ago. Okay, and now the next ingredient that we're looking for would be the movements. Okay, well, at the moment we see that the support line, we see further support lines, by the way, but the nearest support line that I see is 25,000. So 25,000 from where we are, this is how far away. Let's do the math here. So we're going to take the current price 25283 and let's actually make our entry using the execute when price hits. We will determine our future entry. So 25285, this will be our entry. So 25285, brilliant. And the next one, take profit, and stop loss. Okay, again, for this to make sense for you guys, when we sell, our intention is that the value will decrease. So take profit will have to be in a lower price rather than a higher price. The stop loss is going to be in a higher price. Okay, this is going to look like this, with the profit area down and the loss area higher. Okay, in a sell scenario, Now, why is this important? Because now when I want to identify the movements of how far away Nasdaq can move, I'm going to look at the entry, I'm going to look at the current price, and I'm going to try and measure how far down it's going to go to give me an approximation how far should I basically close the position and design the take profit. So I'm going to enable that now. I'm going to enable also the stop loss, and we're going to see together with those things in mind how far away it can be. Now, one reference for this would be to just analyze the previous candles. We're going to enable the crosshair, and with the differences, we can try and estimate what would happen daily. But what the problem is in this method, just to show you, look at the size of this candle here, or maybe even this one, just to show you some comparison of why this dinosaur technique is not going to work. Because if I'll start measuring, just notice the yellow. Oh, we can barely see that now. Let's make it maybe white. Yeah. So if we're going to pay attention to the size of those candles and the shape of those candles, never mind if it's green or red, yeah, right? But just the size is here to show us that the Nasdaq tendency to move, the volatility range is various. Yesterday, it moved very little. 2 days ago, it moved very, very little. Last week, look what happened. And on the 10th, I mean, just look at that. It's way more than what happened in here. So still, how do we get an average of how much it can move if we can take the reference from previous candles? Well, we got an indicator for that. We're going to click on the indicator. We're going to click on type to filter, and we're going to type AVE for average true range. Then we can click and drag it to the empty box. In here, we can simply define the number of candles that we wish to withdraw our average from. So if, for instance, we see that let's just count. Let's count together. So this is the day. We've got 1, 2, 3, 4, 5, 6, 7, 8. This is approximately where I would be satisfied, because those candles are exceptional. Okay, they are exceptional. So we're going to keep it at 8. Then we're going to click here, change the arrow, the color to yellow, and we've got the average right away. So we've got 291. This is $291 average for NASDAQ per day. Okay, based on the 8 past days, right? Based on the past 8 days. Now, okay, so this is our reference. This is our average true range. Can I rely on this 100%? Can I design my take profit to be exactly 291, or it can move more or less? What do you think? Is it guaranteed? For NASDAQ to move 291, or it's just a range? Guys, I want you to pay attention to what I'm showing you here. The average true range is called average true range because it's giving us a range. It's not giving us a guaranteed number. It's just giving us, it can move more or less. It's just giving us some reference. So if I'll place it exactly at 291, it might not get there. Yeah, it might go beyond, but it also might not get there. So what I would like to do in this case is, when the market is volatile and we see difference in size of candles, is I would like to use a partial amount out of the average instead of taking it flat, 291. So instead of targeting my take profit so far away, I'm only going to take third of the actual average, which will be 100. Okay, adjusted to 100 due to market volatility. Of course, you don't have to do what I did. You can just decide you're going to use the ATR to its full extent. There is nothing bad at that. Now, if I'll take 100, correct, Samir, it can move less. Exactly. You got it. There is a question here, another question from Sydney. How would I know that rate is up enough for me to start trade? I still, unfortunately, I don't fully understand the question here. Maybe try and ask it a little different. Very sorry. Okay, the maybe the trend, maybe you meant the trend is up, not the rate. Please help me with that. So in this case, what we're looking at here is very simple. Initially, we looked at the trend. It seems like NASDAQ has some possibility going down since we saw that. And then we saw that when it gapped up, it might, try to cover that. And I also wanted to estimate how far down it can go, since this is a little far away. This is almost as much as the range, by the way. Yeah, let's look at the range. 291. We are now $295 away. Yeah, kind of makes sense. So if we stay with $100 reference, we're gonna click on this and then drag it to 85. 85. Oh, sorry. Makes more sense. And now we're looking at the $100 way that we targeted from the entry. And we're going to take the same $100 as a reference. To the other way around. So this will be 25385. Now we're looking at a $100 difference for each. So this is going to be our entry 2528. Oh, sorry, this should be in 5. And take profit 25185 and now 25385. Yeah, basically we're okay. The last thing we need to adjust in this case will be how many units we need, right? So in this case, let's see how many units. So to find the units, what we can do is we can go target or sum divided by movements equals units. There is a question here from Sibugeni. Okay, if you don't mind, could you please give me some more explanation on how you choose your take profit using the daily moving? Yes, of course, of course. Yes, of course. There is a question here from Marcus. Why did you select 100 instead of 291? Okay, so for both of you, the reason that I did this is because, and this is also why I choose the take profit and the stop loss to be there. The average true range that we have applied, which showed us, you see, I was on days, it shows us that this is the average movement per day, right? This is the average movement per day. But the days we have now are smaller than the days that we have in here. Look at the difference of each, right? Of each. It's not the same size of candles. All right, for both, for Marcus and for Sibugeni, right? It's not the same. So it wouldn't make sense for me to use this 291. I want to take less to be insured, to be more safe regarding placing my take profit and stop loss. So instead of 291, I just looked at 100, which is less. So if the average is 291, I believe it can move less than that. Yeah, I hope it makes sense for both, for Marcus and Sibungeni. If it doesn't, just tell me and I'll explain again. Now, how do we want to get to 250? But from what I see, the possible profit and loss is 100. So how do we get to that? We need to increase our quantity. So let's use the equation we've got in here. 250 divided by 100. Okay, this is how much? Let's check together. $2.5. Okay, 2.5. So let's try. Okay. Yeah, unfortunately, NASDAQ, the base minimum is 0.01. So I can take half, half indice. I cannot do that. It needs to be one indice or more. So I need to choose if to either go with 0.02 or 0.03, which in this case will give me 200. But I'm pretty happy with that. I'm happy to adjust it. Let's make it 200. All right. Now, number of units will be 2. This one, 2.5, corrected to 2. Again, because we can't take half an indice. So this leads us to 200. 200 per day is not bad at all, and 200. Now, in this case, I'm looking at the ratio. But by the way, if there are any questions until this point about anything that I said through the process, feel free to let me know. Okay, now to sum this up, initially we looked at the trend, and then after we saw the trend, we decided to have measurement. Where will be our entry? Where will be our take? Oh, let me just also adjust this to what we said. So now 25385. Yeah, and this is basically how it looks like. This is how it looks like. Our entry is this. Our take profit is this, and our stop loss is that. So we've got all this here is this loss area, and in here the profit area. Now my problem with this ratio, the problem with this ratio is that if I lose or make profits, I lose and gain the same amount. This is a ratio of 1 to 1. So sometimes I would like to adjust this ratio to be 1 to 2 or 1 to 3 or more. Why? Because at the moment, okay, first I'll explain how this can be done and then we'll explain the reason. So how can this be done? At the moment, I'm looking at 2% exposure. How can we validate? We can go possible loss divided by balance equals factor times 100 equals exposure percentage exposure. Okay, so if we'll take 200 divided by 10,000, that's 0.02. And then if we'll multiply by 100, we get 2%. Okay, if we'll do this together, just to remind you guys that there is a recording of this webinar, okay? There is a recording. There is a question coming from Lewis. How did we find the entry? The way that we found the entry is just tentatively, we choose to enter now. We didn't find the entry, we just choose to enter now. We could decide to enter higher or lower, but we decided to enter now. This could be adjusted, but this also means that we would need to adjust both the take profit and the stop loss, so we're not going to do that. But the entry is something else. It's entirely something else. We're not going to teach that today. I just decided to enter now. Thank you, Marcus. So I'm happy that you understood. The what I'm showing you now is 2%. So how do we adjust? How can we maintain our profit of 200 and reduce the loss to 100? Okay, what I want to do, guys, is I want to maintain this to be 2%, take profit 2% a day. That's quite nice. And I want to maintain a stop loss at 1% or even less. You know what? Let's make it less. Let's make it, no, let's keep it like this. Keep it 1%. How can we do this? Anyone has any idea? How do we maintain the 200, but we reduce the losses to 1%? There is a question from Emmanuel. How do you handle losses? That's exactly the topic of what we're trying to do now. So guys, how do we adjust? Anyone has any idea? We want to maintain 2% profit, but we want to reduce to 1%. Good job, Marcus. You get the stop loss closer. Good job. Good job. So how do we do this? How do we really get this closer? So all we got to do, if this is the stop loss, we're going to drag it down. But by how much? What we can do is we can just take the reference. The reference is $100, right? $100 away. And we can just divide that by half. So we're going to take the $100 away. We're going to divide that by half. Then we get 50. Now, instead of placing our stop loss $100 away, that's only going to be 50. Therefore, if the entry is 25285, and then we'll add 50, then we get 25335. Yeah, which leads us to $100. Okay, does this make sense to everyone? Does this make sense to everyone? Question from Phil, why did you add the 50? So Phil, I have added the 50. Why did I add the 50? Because we are in a sell. We're selling. We're selling, so the stop loss needs to be higher. If this would be the other way around, I would reduce that from the current price instead of ending it. Does it make sense? Correct, because it's a sell. Exactly, because it's a sell. Now, let's put it to the test. We said 25335, 25335. Yeah, perfect. And lastly, let's just validate that we do have the budget to take this position. Okay, so how do we do this? What we can do, let's take the price per indice. Price per index equals 25296 times 2, right? Because we've got 2 here. So we can go price per index times number of units, which is 2, equals 50,592. That's value. And we've got here the leverage. Leverage is 1 to 20. 1 to 20 multiplies buying and selling. This gives me the ability to acquire a position 10 times more than the balance that I actually have. So this means that if I multiply it by 20, I can also divide the value by the leverage to know my margin requirement. Okay, so if I'll go value divided by the leverage, what we get is the margin impact, necessary amount to open the position, which will be we divide 50,582 by 20. This is, guys, what we get. This is what we get, the margin impact. Yeah, this is actually what we need to be valuable to open the position. Okay, very, very simple and straightforward. There's really nothing crazy that was done here. So 50,058. Sorry, it was like this. Divided by 20. This gives us, like we said, 2529. Yeah. So guys, this is, like I said, a very, very straightforward methodology that I taught you today. And of course, I could delete if I would. If I want to trade something else using the same methodology, we can just delete the name of the instrument, replace it. We can keep all of those. Maybe just the average will change, since if I'll take another instrument, it might have a different average. And of course, I can change the numbers in here accordingly, but the system, I can use it the exact same way. If there are any questions until this point, guys, feel free to share with me. Any questions at all? Can I ask, why did you take a sell if Nasdaq is going up? This is an excellent question. This is an excellent question. Thank you, Tim. The reason that I did this is because, by the way, let me just show the audience what you're talking about. Okay, so Phil has asked, why did I take a sell? Well, this is how Nasdaq looks like on the weekly basis. But the reason is, okay, this is how it looks like. This is Nasdaq, yeah? This is what we're looking at, which appears to go down on the days. Now, the reason that I did this is exactly the reason that I designed those 4 ingredients for daily. Because on the weekly or on the monthly, it might be going up. Yeah, the general trend, it might be going up. But for me, right now, this might be a sell. Yeah, just because we intend on holding this position for a day or two. If it doesn't get there, I might decide otherwise, close it, or do something else. But there is analysis for short term and for long term. And I'd rather acknowledge a time that I'm planning to hold this. Otherwise, my analysis, let me show you what's happening with minutes, just for you to understand what I'm saying here. Okay, this is how frequent the market changed. Just in the past, I think since we started the webinar, right? So, and now it looks like this. All right, so thank you for the question. Unfortunately, guys, the time is up for today. Thank you all for joining us today. I hope that it helped. I hope that my explanation helped. Like I said, the recording can be found on our YouTube channel. I know some bits were a bit more swiftly, but I had to deliver, to convey what I've taught you. You're all welcome to join us with tomorrow's live Q&A. Until then, I wish you all to have a fruitful week. Best of luck with trading, and have a good day.